license since time began, like umpteen years ago. He's chief economist, Bank of Nassau, Winthin, this morning as well. When the financial stability of the EM system, it's like a Bill Lee question when he was, at Milken and all. What does the financial system of EM look given the shocks of this war?
Well, you have sort of the haves and have-nots, as always, right? So the first of all, again, thanks for having me. It's always a pleasure to be with you guys. The energy exporters are doing okay. The energy importers and sort of the frontier countries are not. So we have to go back to how this oil shock, how much longer it lasts. We'll see how this rolls out. I think I've talked about this a million times, but I think we are in what the IMF calls the adverse scenario. And that's when things get a little dicey. You get slower global growth, higher inflation. Emerging markets, or you always have Colombia, Sri Lanka, Pakistan, and Philippine central banks have already hiked rates to defend their currencies and to sort of tamp down inflation. So it's going to be, I'd say, a stressful time ahead. I don't see any big, huge blowups, but it's going to be very challenging for emerging markets.
I think it's going to be pretty challenging for our new Fed chairman, Mr. Warsh. I mean, coming in, presumably feels some pressure to lower rates, yet the data doesn't seem to support that at all.
No, you're absolutely right, Paul. He's inheriting a very different situation than he saw, I think, 6 months, even 3 months ago. So he's one of 12 people on the FOMC. His job as chair is to cajole and to discuss and corral, but there is a huge contingent of hawks right now on the Fed. So I think right now, the Fed is on hold for the foreseeable future until the inflation comes down. But the market's pricing in 50 basis points of tightening over the next 12 months, which seems a little aggressive. But let's see how the data comes out.
How sticky do you think this inflation is going to be? Is if we have some agreement today, which could certainly happen given the actors here, oil comes back down. Is that it, or do we have something underneath that?
I do feel there's going to be some lingering effects. I think if you listen to the oil industry experts, the sort of normal production isn't really going to come back in the Gulf for 3 to 6 months, maybe even longer. We're talking about all the backlogs as well as the destruction of the infrastructure there. So it's going to take a while. Obviously, oil prices had a huge risk premium, and that's what's coming down. I don't think anyone has a feel of where the fair value is given all the destruction we've seen in the oil sector. It's a risk.
Yeah. I don't know. We say that, but this U.S. consumer, you cannot keep this consumer down. What do you make of the U.S. consumer?
So I'm starting to see some cracks. Okay. If you look at the real numbers, the nominal numbers look great. Because, if you look at the retail sales, personal spending, the headlines are all nominal. So remember, we're in a high inflation environment. If you dig deeper, the real spending, the real consumption is a little bit on the soft side. Okay. We'll get real personal spending this Thursday, along with PCE. I think it's going to show the dilemma that the Fed is in. We're going in a high inflation, sort of slowing growth environment. And that's always sort of the challenge for policymakers around the world. This sort of stagflationary environment. There's no easy answer.
How long does stagflation last, typically? Is there a
it
seems like you could bump along that road for a while.
Yeah. So there's a lot of, in some ways, there's some parallels, obviously the 70s, but really the main thing right now is that the U.S. is an oil exporter. So that's the one thing that really has cushioned us. But face it, we get back to what you said, the consumer is 70% of the U.S. economy, and we're getting squeezed by high gas prices, high energy prices, high food prices. The labor market's stabilizing, but I don't think anyone's out there breaking the champagne open. I know this graduating college class had a really tough time. So I see some signs of nervousness. Within the consumer, and it's again to be determined.
I haven't written on this yet, folks, because it's too difficult, and also I got to find his magnificent speech. Let's do it for the first time with Winthin of Columbia University. We've lost Ned Phelps, 92 years old, a giant, argumentative giant of economics. I loved what Olivier Blanchard said. He said we didn't agree. Basically, to paraphrase, Professor Blanchard said Ned and I didn't agree on if the sun came up in the east. but there it was. I want you to define his work on dynamism in this time of AI.
Well, unfortunately, I did not have the pleasure of having any classes with him, but he was there during my time, and we had quite a few giants there. That are unfortunately rest in peace. There many are gone now. That sort of tells you how old I am. But the Columbia University was a real incubator for just great growth. I think a lot of the sort of the neoclassical and classical economists would have a hard time trying to figure out what's going on in AI. I mean, obviously there's a whole boost to labor productivity. That's great for the economy, but Paul and I always discuss this. What does this mean for labor overall? Is this going to be a net job creator or not a net job destroyer? I don't think we've seen this sort of technological innovation in this short period of time. So I think it'd be great right now to be a PhD student. There's so much to write about in terms of the impact of AI on productivity, labor demand, labor destruction.
But to go to L-Arian, the unknown is real.
That's right.
I mean, it's hugely real,
Yeah.
to say the least.
That's way above my pay grade. I do know that right now we're benefiting from this huge investment in all the infrastructure. We're finally seeing some payoffs. Right. But if all these people are being put out of work, who's going to buy these goods? Who's going to buy? Who's going to consume?
That's what Paul says.
I'm with Paul on this. I'm a little bit pessimistic, but someone accused me of being a Luddite.
With the Bank of Nassau wind thin there with comments today, and again, this idea of they're having rate increases. It could never happen in the United States. Right.
I don't know.
We will see as 2026 unfolds.